something called accounts. An account is created for a discrete piece of information that you want to keep track of. So you can see here the example we're going to have is Doogie's Dog Grooming Corporation. Karen thought of that. Oh, I didn't really give Karen sufficient permission for the book and stuff. Wait a minute. Anyway, an account is a discrete piece of information. By the way, Karen taught here. We had Karen teaching here, I think, for 3 years, and now she's a professor at NJIT. Different things you want to keep track of. So you want to keep track of how much cash you have, how much accounts receivable, and things like that. And we have different kinds of accounts. And let's just go over this. You've seen this before. Assets, liabilities, and stockholders' equity are balance sheet accounts. Revenues and expenses, remember, are income statement accounts, because revenues minus expenses equals net income. That's the format of the income statement. So what I'd like you to do right now is take a second and fill in what each account is. So for example, cash is an A for asset. And then answer the remaining questions on the page. I guess I should resume this. Then revenue is a revenue account. Depreciation expense is an expense, goes on the income statement. Insurance expense, expense. Rent expense, supply expense, and wage expense. So what we have here is, we have a list of, and this is just a sample, a mini trial balance for purposes of this class. In the real world, you may have a company that has thousands of accounts, literally thousands of accounts, because there's a lot of things they want to keep track of. So for our purposes here, this is a pretty simple business, and we keep it simple. So in what order is this chart of accounts? First you have what? Assets. Second you have liabilities. And by the way, this is always going to be the order. This is what all companies do. Third is stockholders' equity. Fourth is revenues. And last is expenses. Within Doogie's chart of accounts, account numbers for assets start with 100. Liabilities start with 200. Stockholders' equity is 300. Revenues is 400. And expenses are 500. And that's kind of standard, but you would typically have account numbers for each account. Within within this chart of accounts, account numbers increase by what? Ones or tens? Tens. And then that allows you to make room in case you need to add more accounts later. So if a company receives a utility bill, the most appropriate account number for utilities payable would be a new liability. What would you number utilities payable? At 230. And then what would you call, what number would you do for utility expense? 550. And just to show you, I haven't looked at this in a year, but oh, and it's not here. Never mind. Okay, I was going to show you a real trial balance that I have. Maybe I can wait. Maybe during the break I'll try and dig it up in new cash. Okay, we have more time. Now we have the basic idea of a transaction.